Home buyers are back because pending home sales just posted the biggest gain since November of 2021, and closed home sales also improved as well. But will this be short-lived given the rapid rise in mortgage rates over the past 1 month? Let's discuss because I have a lot to share in today's video. Thank you so much for joining me, and let's begin. So here's this new report from Redfin just posted today, which is on October 10th. It says home sales are rising in most major US metros as housing payments sit near the lowest level since January this year. But they're falling in coastal Florida as hurricanes hit the southeastern part of the United States. Mortgage interest rates rebounded over the weekend, and that could soon begin to impact home buying demand. So let's kind of take a step back here because I can see people getting confused, rightfully so, because over the past week or so, rates have increased by nearly a half a percentage point, or about 50 basis points. And that was because of last week on Friday. Last Friday, we had basically a strong jobs report that was announced that showed that more jobs were being added, or more jobs were added in the United States compared to what was expected. And that caused mortgage rates to increase greatly last Friday, about 1 week ago. So I thought it'd be a really good idea to kind of share really quickly lagging versus leading indicators and how mortgage rates are impacting these. So let's first talk about that right here. So this is according to the Mortgage News Daily as of Thursday, October 10th. The average daily rate for a 30-year fix for people with great credit is at 6.62%. Looking at the 1-year chart, 1 year ago, we were at 7.62%. So rates have decreased by about 1 percentage point, or 100 basis points compared to 1 year ago. Now, here's why I want to share that with you guys though, because anything that has to do with a closed home sale, in this report from Redfin, this would be days in the market, how fast or how slow houses are selling, the average sale price to final list price ratio, and also closed home sales and the median sale price, all lagging indicators what our housing market was like approximately 1 to about 1.5 months ago on average, but mostly about 1 month ago. This report from Redfin actually covers the 4 weeks ended October 6th. So mostly based on closed home sales for September, which is really what the market was like for the most part in August. And what happened in August? Let's look at the daily rates according to the Mortgage News Daily. So in August, which is basically right about here, rates fell to 6.40%. Before that, 1 month prior, we're at 7.14%. So rates decreased big time over the past previous month. And then rates really more or less decreased for the remainder of the year, or remainder of the month, in August. They actually ended the month at 6.43%. So when looking at lagging indicators, like I mentioned, this is based on an environment in which mortgage rates were decreasing from around 7.13 to about 7.3% down to about 6.4%. So when looking at stats that have to do with a closed home sale, that's really what the market was like when we had mortgage rates decreasing by quite a bit in August. That's lagging. Let's look at leading indications though, because look what happened over the past several days. We went from about 10 days ago, the average rate 6.2%. Now we're at 6.62%. So rates have increased by about 40 basis points in the past 1.5 weeks. I mention this because leading indications could show a slowdown in home buying demand, but this rapid increase in mortgage rates over the past week or so could slow down home buying demand and could end up seeing lagging indicators based on closed home sales in about a month, showing a slowdown in overall activity. In any case, hope that makes sense to provide some context here, because looking at some of these figures, a little bit confusing because we've been seeing some volatility in mortgage rates, to say the least. They also say here that pending home sales rose by 2% year over year during the 4 weeks ended October 6th, the most recent data we have from them. That was the biggest year over year increase in 3 years. In fact, going back to November of 2021. Home buying demand also picked up at earlier stages as well, based on Redfin's Home Buyer Demand Index. That's the measure of tours and other home buying services that they're getting from their agents That increased to the highest level since May last week. Also, mortgage purchase applications, according to the MBA, they basically have an index which measures the amount of people who are submitting applications for home loans to buy houses. That's their purchase index. That was up by 8% month over month. And new listings also have been increasing as well, with a 5.7% increase from 12 months ago. But unlike the increase in pending sales, that is a continuation of a trend because new listings have been increasing compared to 1 year ago for nearly a year. In regards to applications increasing by 8% month over month, let's take a look at that, which is on investing.com on their economic calendar. So 1 month ago, the index was at 138.6. Now, as of Wednesday, 1 month later, it increased to 149.2. That is approximately an 8% increase compared to 1 month ago. Now, going to the actual report, which I'll share with you guys as a link in the video description below. This was posted 1 day ago for the week ended October 4th. It says their index increased by only 0.1% from 1 week earlier, but was up by 8% than the same week 12 months ago. In the wake of stronger economic data last week showing that strong jobs report that was announced on Friday, rates moved higher, with a 30-year fix rising to 6.36%, according to the MBA, the highest since August this year. So this could impact or slow down home buying demand once Redfin gets results for this week into next week, given that rates have increased quite a bit over the past week and a half. Redfin also goes on to say the following: pending sales, which is a measure of contracts being signed between buyers and sellers, buyers getting the offer accepted. So pending sales improved because buyers came out of the woodwork in late September after the Fed's interest rate cut. So back in September 18th, the Fed cut their federal funds rate by 50 basis points, which was expected. But ever since then, really, mortgage rates have been increasing, believe it or not. And it says here, falling mortgage rates prior to the interest rate cut, which I want to share with you guys, have pushed the typical home buyer's housing payment down to $2,526 per month. That's its lowest level since January this year. Now, remember, the Fed cut interest rates, the federal funds rate, on September 18th. But despite that, rates increased from 6.11% to 6.15%. And more or less ever since then, rates have been increasing because the Fed cut was widely anticipated. Therefore, the rates we saw before that were already baked into the consideration or the expectation that the Fed was going to cut rates on September 18th. And the increase in rates ever since then is really due to new economic data that was released that showed that more jobs are being added, and also that inflation is also increasing quite a bit, or actually increasing a little bit as well, based on the CPI report that was just announced today, which is on October 10th. That showed that this is a consumer price index, or the CPI, which is prices in which consumers pay for goods and services in the United States. That showed that inflation was increasing at a higher rate compared to expectations. But in any case, rates have been increasing, or mortgage rates have been increasing ever since the Fed interest rate cut. And that is what Redfin also says here as well. Mortgage rates jumped over the weekend, which is kind of funny because rates don't increase on the weekend. They actually increase during the business hours or business days. That's Monday through Friday, not on the weekend. Anyways, so mortgage rates actually jumped on Friday, not over the weekend. Anyways, this could deter some home buyers in the coming weeks. We expect some buyers may back off due to rising rates, but not all of them. Mortgage rates are still significantly lower than they were 1 year ago, as I shared with you guys, down by about 1 percentage point. Let's read on as well, because they talk about the impacts to the housing market in Florida due to these hurricanes that have been hitting them. So pending home sales are rising in most metros, but they're falling in some places, most notably Florida, which makes sense. If there's hurricanes, no one's going out to look at houses to buy, right? You're more worried about your safety than selling a house, for example, or buying one. In West Palm Beach, Florida, pending sales fell by 17.6% year over year. That was the biggest decrease amongst the 50 most populous metros. That was followed closely by Tampa, down by 15.5%, and Miami, Florida, down by 14.8%. That's due partly due to Hurricane Helene, but coastal Florida housing markets have also been slowing down due to the recent increase of insurance and HOA costs as well. So Hurricane Helene and Hurricane Milton, which hit just days later, may have a bigger impact on future home sales in Florida. All right, let's change gears slightly here and talk about some key takeaways what happened over the past 1 month. This is actually for the 4 weeks ended October 6th. Redfin tracks approximately 400 plus US metros, and their weekly data goes back through 2015, and it is subject to revision. So regarding the US median sale price, we're at $383,225. This means that of all the houses that did sell, half sold above that amount and half sold below that amount. That was an increase by 4% year over year. Asking prices rose by a higher amount, up by 5.7%, the biggest increase in about 2 years. Meanwhile, as I mentioned, your average monthly housing payment decreased by 5.8%, near this lowest level since January this year, and also about $300 less per month compared to the highs we saw back in April this year, when mortgage rates were much higher then than they are right now. Let's also have a look at how each of the 50 most populous metros fared. So the biggest increases in prices from 12 months ago is actually in Newark, New Jersey, up by 11.4. Then we have Nassau County, New York, up by 11.1. Milwaukee up by 10, Chicago up by nearly 10%, and Cleveland also up by 9.7%. So there's only 5 metros that decreased compared to 1 year ago. This is actually an improvement because 1 week ago, according to Redfin, there were 7 metros that were down year over year. Those 7 metros that were down 1 week ago were Austin, Tampa, Fort Worth, Texas, Denver, Dallas, Oakland, and San Antonio, Texas. Now there's only 5 metros that are down. That's Austin, Tampa, San Antonio, Oakland, and Fort Worth, Texas. Let's have a look at Redfin's data center regarding the US median sale price. It actually increased compared to 1 week ago. So we're at $383,000, up by 4% year over year. That is an improvement from the only $382,000 we saw 1 week ago. So we're down from the peak, which was set more or less in June at $396,000. Now we're at $383,000. So it's kind of interesting that we have been kind of following the same trajectory as last year, which is right here, up by about 4 to about 5% or 3 to 5% virtually all year from 2023. However, when I compare this year to 2022, 2 years ago, you can see really starting in July, we saw a sharp decrease in home prices, closed home prices that we saw then because of rates increasing so much and inventory piling up. This year we have about 30% more homes for sale, depending on your source. I think Redfin's showing that we have approximately 20%. But in any case, because of this correction we saw in 2022, it's not as bad as the decrease we're seeing so far this year, which, by the way, just including 21 and 23, you can see that home prices tend to decrease after the summer months. So it would be entirely normal to see prices kind of decrease for the remainder of the year. Let's also take a look at pending sales, new listings, and active listings. So obviously pending sales is a measure of contracts being signed between buyers and sellers. New listings is when a homeowner lists their house for sale. Active listings is the total number of houses actually for sale. So pending sales rose by 2%. That was the biggest increase since November of 2021. New listings rose by 5.7%. So new supply increasing at a faster pace compared to contracts being signed, which has been a common trend we have been seeing for quite some time. Active listings rose by 18% year over year, but that was the smallest yearly gain since April this year. Let's have a look at Redfin's data center. So pending sales posted a gain up by 2%. It has been in negative territory basically all year, kind of flat for the most part, following 2023's levels. But this is actually the first time we've had a gain in quite some time, up by 2%. The last time we saw a gain that big, it's not a big number, but very big difference compared to the past several years. The last time we saw a gain in pending sales by more than 2% was way back for the 4 weeks ended November 28th of 2021. At that time, we saw a gain up by 3.6%. One more thing I want to share regarding this chart, a gain of 2%. Look what happened in 2022 this time. We had a giant decrease down by 26%. Now we're up by 2% right now. Also, during the same time frame last year, we were down by 9.5%. So quite the improvement from the past several years. In regards to pending sales and new supply hitting the market, let's have a look at how each of the 50 most populous metros fared, because of course there's some very big differences. So pending sales rose the most in the nation, up by 14.1% in Phoenix, Arizona. After that, we have Seattle, San Jose, California, San Antonio, Texas, and Virginia Beach, Virginia, up by 11%. In contrast, there was 18 metros that decreased from 12 months ago. The biggest decrease was actually every single one of these is in Florida except for Atlanta. West Palm Beach, Florida, down by 17.6. Tampa down by 15.5, Miami down by 14.8, Fort Lauderdale, Florida down by 12.8, and Atlanta, Georgia down by 12.5%. Therefore, 32 of the 50 biggest metros posted a gain and only 18 posted a decrease. We actually have a different scenario though when looking at new supply hitting the market, because there's only 9 metros out of the 50 that posted a decrease. Therefore, 41 are up compared to 1 year ago. In fact, the biggest increase is San Jose, California, up by nearly 25%. Then we have Phoenix up by 22%, New Brunswick, New Jersey up by 20%, Seattle up by 18.5%, and Baltimore, Maryland up by 17.2%. In contrast, the biggest decreases of new listings is Atlanta, Georgia, down by 18%. Then we have Tampa, Florida, San Antonio, West Palm Beach, Florida, and Austin, Texas. Austin was down by 5.6%. Let's also discuss the month supply as well. We're sitting at a 3.9 month supply, which is an increase of 0.7 months. So in other words, 1 year ago, the month supply was at 3.2 months. Now we're at 3.9. This is at least a 3-year high right now, way higher compared to the same time frame in 21, for example, when the month supply was only around 2.2 months. Now it's at 3.9 months. But it is a decrease compared to the past week or so because 1 week ago, we were actually over a 4-month supply. I also want to share this with you guys as well, days in the market, how fast or how slow houses are selling right now. So the median days in the market, a lag indicator, is at 39 days. This means it's taken about 7 days longer to sell a house over the past 1 week or 1 year, 1 month, I should say, compared to the same time frame in 2023. Because at the same time frame last year, it took approximately 32 days to sell a house. Also at 39 days, this is also at least a 3-year high as well. Let's also have a look at the average sale price to final list price ratio. That's at 98.8%, which means out of all the houses that did sell over the previous 1 month, they sold for 1.2 percentage points less than the seller's final list price. Try to say that all together in one take. Anyways, I made this video for, gosh, I don't know, years, right? So interesting how this is all shaping out. So houses on average selling a little bit less than asking. This is at least a 3-year low during the same time frame. So for example, during the craziness of 2021, homes on average sold for about 1 percentage point over asking. Now they're selling for 1 percentage point less than asking price over the past 1 month. Also, something I just noticed, how many times do I find errors on Redfin's reports? I think last week I shared an error that they reported. Here's another one. Their axis on the left side do not agree to their numbers. So again, it's 98.8%. Looking right here, it's actually above 99%. So this is Redfin. I'm not even going to go there. Anyways, I'm sick of emailing Redfin with all their errors on their reports. Just for a publicly traded company, you would think that they would get their graphs right? Anyways, so annoying. All right, lastly, one more slide. Let's just see if this one's correct. Their index, their home buyer index increased by 2% year over year. Their index is approximately 125. That is higher compared to same time frame last year, which is the orange line in red, or the orange line below, excuse me, but a little bit lower than 2022 and 2021. Also, what stands out to me regarding that is that their index has been increasing slowly ever since really, let's call it late July. Compare that to last year, their index decreased from July all the way basically until the end of November. In any case, thank you so much for watching today's video. If you guys aren't subscribed just yet, I invite you to do so. I post frequent housing market updates. Hopefully you guys feel it's unbiased. I do my best to kind of share middle of the ground reporting regarding what's happening right now, whether it's good news or bad news for home buyers. I know a lot of people get triggered when I talk about increases in prices and increases in sales, but it's the truth. Anyways, hope you guys get a lot of value. I hope you guys did get a lot of value of today's video. If you did, then please hit the like button. Again, also consider subscribing as well. I'll provide a link in the video description below for this article and all the articles I post on my videos. Hope you guys have an awesome day. I appreciate you guys so much. See you next one.